You ever get the feeling there's a whole other world of investing out there? One with these incredible startups and amazing opportunities that you just can't seem to touch? Well, you're not wrong. There is, and it's massive, exclusive, and for most of us, the doors are completely locked. In fact, get this. An estimated 90% of all American households are on the outside looking in. That is a staggering majority of the country that's completely barred from participating in a huge slice of our economy. So, locked out from what exactly? What is this exclusive club? Well, we're not just talking about a few weird niche investments. We are talking about the main engine that funds innovation in this country. And to give you a sense of the sheer scale here, just look at these numbers. In one recent year, companies raised a mind-blowing $2.3 trillion through these private deals. Now, compare that to just $1.2 trillion raised in all public stock offerings, like IPOs. The majority of the action, the real money, is happening behind this velvet rope. And the bouncer at the door, the person holding the key to get inside, has a name, the accredited investor. It's a legal term from the SEC, and it's all about identifying who's allowed to play in these private markets. The thinking goes something like this. These investments are risky, they're not registered with the SEC, there's less public info, and they can be hard to sell. So the rule is supposed to make sure that only people who can afford to lose the money or are smart enough to get the risks are the ones allowed in. Okay, but here's the real kicker. The rules for getting past that bouncer, they've been basically frozen for over 40 years. They are fundamentally stuck in the economics of a totally different era. These rules go all the way back to 1982, and they're almost entirely about how much money you have. You've got to make over $200,000 a year or $300,000 as a couple, or have a net worth of over $1 million. Now, yeah, they added a small update in 2020 for a few professional licenses, but for most people, it's all about those dollar signs. And you have to consider inflation, right? That $200,000 income rule from 1982, well, to have the same buying power today, it would need to be around $600,000. Because those numbers were never updated, the barrier to entry has actually gotten lower and lower over time, not because people are any smarter, but just because of 4 decades of inflation. And this whole situation really forces a much bigger question. Is how much money you have the right way to measure financial smarts in the first place? The entire rule is built on this really shaky assumption that the size of your bank account somehow equals the size of your financial brain. Let me just paint you a quick picture of how this plays out. On one hand, you've got a scientist with a PhD. She's a literal expert in biotech, but she only earns $180,000 a year. She is legally forbidden from investing in a medical startup in her own field of expertise. Okay, now on the other hand, you've got somebody who won the lottery yesterday, zero investment experience. But because their net worth is over $1 million, they are free to pour money into any complex AI company they want. Does that make any sense at all? It's like the expert Aaron Solomon from Crunchbase put it. The assumption that wealth equates to financial sophistication is both outdated and absurd. It's a system that judges people by what they own, not by what they know. And look, this isn't just some abstract theoretical problem. It has huge, real-world consequences. This rule makes wealth inequality worse by saving all the high-growth opportunities for people who are already rich. It disproportionately locks out minority households, and it can starve innovative startups in some communities from getting local funding from the very people who know them best. The good news is, there's a real movement to change this. And reformers aren't saying, hey, let's just get rid of all the protections. No, they're saying, we need to make them smarter. So there are pretty much 3 big ideas on the table. First, let's just update the money tests for inflation to get them back to where they were supposed to be. Second, and this is a big one, let's create a new way in based on knowledge. Let people prove they know what they're doing by passing a tough exam. And third, maybe we can create a tiered system where people who are kind of qualified can make smaller, limited investments. And, this isn't just talk. The Equal Opportunity for All Investors Act is a real bill that's actually passed the House of Representatives. And its whole point is to tell the SEC to create exactly that kind of knowledge-based test. What's really interesting here is that the US is kind of an outlier. We're falling behind our peers on this. The UK already uses higher inflation-adjusted wealth limits, but it also lets investors just self-certify their expertise. And the EU is moving towards regulating the investment activity itself, instead of just crudely blocking people based on how rich they are. So what happens if all these reforms actually go through? I mean, it could fundamentally change the entire investment landscape in America. Think about it. A wider, more diverse group of qualified investors isn't just about being fair.
It could mean a massive flood of new capital for startups, for small businesses, for the next wave of American innovation. And it would be funded not just by the wealthiest 10%, but by a much broader base of knowledgeable people.
But of course, more access also means more responsibility for everybody involved. Investment platforms would need new ways to check if someone passed a test. Companies raising money would have to be even more transparent about the risks. And most importantly, investors themselves would have to step up and prove they really truly understand what they're getting into. The risks, the long timelines, all of it.
When you boil it all down, this entire debate comes back to one simple but really powerful question. Should we keep using wealth as a crude stand-in for wisdom, or is it finally time to build a system where what you know, not just what you own, is what truly unlocks your financial future? And as always, just a quick reminder that this explainer is for educational purposes. This is not financial advice.